Well, welcome. In this video, we'll talk about using the multi-day vWap indicator that I released on TradingView. You'll find a link to this indicator down in the description. It's free to use. You'll see here on the description, before we jump into a chart, is I do provide some examples on how to use this and give a detailed overview. So you'll find this here on the indicator itself. Let's jump over to a chart and let's talk about using this indicator. So on this chart, we have the RexDog average on here, and then we have, actually let me turn this off. We have the RexDog average, which is the yellow line, and then we have the multi-day vWap. And what this does is it plots the last, at least on the default value I should say, it plots the last 10-day vWap values, and then it has a label here, so you can see here this number 10 is obviously 10 days back. The other thing that this indicator does is that you can turn on an average, and if we turn this on here, you'll see this red line that was just added is the average of whatever the vWap settings that you have. So you can customize this. Now, one thing to note is that this does start just from 1 day, the average. It doesn't go back further, mainly because of the way the vWap is calculated and the way this is calculated. It can only use the lowest value to start from to get that average. So this average is only going to be calculated from 1 day back, or whatever your lowest value is. That means that you really can't do formal back testing with it, but you can forward test with it. It is actually let's jump into the chart and talk about what we see here. So we're looking at Bitcoin on 15-minute. We see a sell-off here, and we see Bitcoin for a while was doing pretty well. If we go back in time here, once it broke through the RDA right here, and it held the RDA on the retest, it then started to break through all the 10-day vWaps, and then it started holding above all the 10-day vWaps. Now, if you're in my training, you're in my membership, you know that the simple way to use vWap is that it's a target or it's a magnet, meaning that when price is above it, it acts as a magnet to pull it back to it. When price is below it, it acts as a magnet to pull it up back, to where the vWap's at. That's the simplistic way of using the vWap. You can get a little bit of an edge there, but the true edge in using the vWap is what I mentioned in my training, which is it trades in channels, and then understanding that and then trading that accordingly. That's your true edge. So that's the way to look at these vWaps. But when you're looking at these multi-day vWaps, these really are a biased indicator, meaning that when it's above it, you know you're in a strong momentum long environment. When it's below it, you know that, okay, something happened. You're in a strong momentum short environment. And of course, you are looking at this as, okay, it does, what is my target? What is my upside reaction area? Well, these can be high probability upside reaction areas. But if we break this down a little bit further, let's look at this and let's just see what transpired. And this will give us some insight into using this indicator. You can see here, we're above the average. We're above the current day vWap as well. It comes down and tests that average. It bounces up, and then it gives up all of the 10-day vWap averages here. So here in this move, it gives up all the 10-day vWap averages. If you don't see heavy reactions at especially a big block like this, when you see a convergence of a multi 10-day vWap, so there's 8, 7, 9, and 4 all are converging in this little channel here. When you don't see a strong bounce or a strong reaction there, that should tell you something that, okay, maybe the sentiment in the market has changed, especially if you're trading the RexDog system. You can see here, it gave up. You got an early warning. It gave up the RDA here on the 15-minute. And then when it gave up the RDA, it pretty much ripped through all this. It ripped through the average. And then here when it gave up the 10, that's when it really just kind of, the momentum increased from this down to here. Not the volatility, but the actual range of this bar is pretty big. So this bar is a significant bar in this overall sell-off, breaking through the 10-day vWap value. So as the chart sits, to use this indicator, here's one way you can use this indicator, which is where's the first target? Well, from the price is stalling right here. We don't have the RexDog system on our chart, but right now, price is sitting right at a momentum indicator on the RexDog system on the daily time frame. So this would be a target where I would buy. And then my first upside target is aligning with the 10-day vWap and is also aligning with the RDA. So this is one way to use this, is basically it's a bias indicator. So since price is below all of the 10 the 10 rolling day vWaps, you're in a momentum short environment. So really you're shorting the pops until price starts trading above these or looks like it's going to break through these. You're really not in a momentum long environment. If we look at another chart, let's just go to a crypto chart, or not a crypto, but a Forex chart. You can see here Euro JPY, same type of look, except what do you have here? You'll notice when it breaks through these, you tend to see this. When it breaks through a block of 10-day rolling vWaps, you tend to see a range expansion. And then what do we see that happened here? We see that it came up, had a run, really sold off on the 10-day, and then that was a good reaction area. Of course, it aligns closely with this breakdown candle anyway, so that would have been within your trade system. But this is just another confirmation. So right now, this chart is screaming momentum short. If we go to Tesla, for instance, I'm trying to find something that's long. It might be hard in this environment. Tesla's at a kind of a decision period here. Let's go to the CAD. So this is a prime example. This is the inverse of what we saw already. The CAD is setting up potentially to rip through all these. So this is where you have to look at these and say, okay, this is the 10-day rolling vWap averages. And if you understand how vWap is calculated, it's volume weighted average price. If you understand how this is calculated and what it's telling you, it is kind of the average price by volume. So if it breaks, when you see price starting to pierce into I'd say a boxed vWap kind of rolling block here, like a range, it will do one of two things. It will use one of these values as a rejection area, as a reaction area, or it will do what we just seen, what I've shown you, is it'll just rip right through it. It'll come back and retest and then continue going in that direction. So that's another way to use these. Now, as we jump to another chart, we're looking at Matic BTC. You see that this is another look that you're going to see. Now, we're right at the average. So we're right at the reaction area. So there's the average vWap price. So if it closes above this, we've got reaction areas above us. We've got one right here, the 7. We've got the 10 and 8, which it previously rejected really close to. And then we've got the 9. What you're really looking for, too, is what you're trying to understand and what this is helping you understand. Because if we look at the daily here, you know, you get this from price action anyways. You can kind of see the look. It's coming from it broke these lows here. If we look at the price action here. Now, one thing I would suggest, too, that you do, this is what I would suggest, is go to the visibility and turn this off for months, week, and days. Because you really don't need to, you might want to see it for days, but it just kind of makes the chart harder to read on a daily. So if I remove this, because really you're looking at this as an intraday time frame, so on lower charts. So when we put the 15 back on, we'll see the indicator. But we go back to the day, we can see that it broke these lows here. So here's these lows, and then it's coming from this level here. So really that's your two most important prices that you're really looking at. It's really here. Your two most important prices on this chart right now are here. These are your two most important levels. You're really in kind of a range between these. So there's no, you do have, obviously, since it just did break above, or it's trying to close above the RDA, then you could do a long, about a 11% long to the first target area. Obviously, you have a target area right here, which is probably about 5%. But if we go, so you can get this by looking at the daily chart. You can get a general feel. Look, we come from a high. Where is price coming from? Where is it going? It came from this sell-off here. It broke these lows. It found support on these lows, and now it has a decent sized candle here that is holding up so far on follow-up price action. Nothing has closed above the close level though. So you can get that, but what the vWap gives you is an additional, those additional factors. Because if we go and look and see where the lines are, we can see here, this is a good, if price comes up here, this is a good example of how you could use this. If price comes through all these reaction areas and it closes above these, then you would reason that these could be used as quote-unquote support areas. And then you can go and do a swing long, or maybe even a longer swing position, maybe on a pullback, and you've got some room between here and about 8%. And you've got these reaction areas, especially as they continue to hold up, that you can use as areas of entry or areas of interesting price action. I'll do another video on interesting price action here in the near future. So let's go to the final thing I want to cover on this, and that's changing these values. So you can change these vWap values, and I'll give you an example of that. So let's go back to Bitcoin, and let's say that we want to get a longer term view of the market. Maybe where do we sit on a longer term chart? Well, here's what you can do. You just change these values to 7 days apart. So go to inputs and just go 7, 14, 21, 28, obviously. And I'll pause the video and finish it up here. Okay, so I went through here and I changed all the values to 7 days apart. You can see we get a different view here. We get a longer term view. So we see now that the average is down here because now this is the average, and the average beginning time will be 7 days back because that's our lowest time frame. You can see here, we broke the 7 day, at least on Bitcoin here, broke the 7 day vWap. Let's go to the 1 hour time frame because we have a larger time frame here. You can see, you can get it. What this indicator really does allow you to see, especially on these intraday smaller charts, is it allows you to see these kind of how things are stacking up when you can see that, okay, 70 days ago, the 70-day vWap were below that. We can see here right around the 63. I mean, there's some reliable rejection points. Of course, we have an overshoot here, but this is probably an overshoot right around 1 standard deviation from the 63. So that fits the model that we trade around. And you can see here, it breaks the 56, and then it breaks the 7 day, which is our shortest time frame here, and then it breaks the 49. What you're really looking for is this is a reactionary, and it's starting to react right around the 14 and the 42, where it reacted before. And that's really what you're using this for. This is like I said, a bias indicator. It's a area. What I would suggest with this is that you're not taking a trade just because it's hitting one of these. You have other factors that it tells you where to look, put it that way. 35, for instance, if it sells off from here, I'm going to be looking right around here for a reactive price, some reaction. If it sells off from there, I'm going to be looking right around here for reactions. If it does come up here, and my first reaction area that I'm going to be looking for is the average. If it does find some support here and tries to actually make a run up to the upside, I'll be looking here for my first reaction area. That's the average, the 49. Of course, we got the RDA above, so that's my ultimate reaction area here, which does align pretty close with the 7 day. So, the 7 day is a strong. People look at the 7 day price or the 7 day percentage and see where things are at. They look at the 7 day rolling price. So this is a good example of using this multi vWap indicator for a longer term analysis. And if you wanted to, you could even go further than this. You could maybe use multiples of 3s. That's where you're doing 3, 6, 9, 12. That's another way to do it. I found that works very well. You could use you could maybe increase it by, instead of just doing 7. It's really what I would suggest if you adopt this indicator, because I use this indicator on a separate chart. I use it as an additional look at the market. It gives me additional information. And the vWap is a powerful indicator. It's a powerful intraday indicator. It becomes even more powerful now that obviously with TradingView, they've added the ability to easily go in, and if we go here and use anchored vWaps, so I'll use my anchored vWap tool, and you just go in here and you can get really an anchored vWap of where price is sitting. if we go to the 1 hour time frame, we'll see that that high that I just selected on the anchored vWap aligns pretty well with the 70 here. So using something like this it won't be as exact as using the anchored vWap, for instance, like I just did, where I'm specifically highlighting important highs or lows. So here, let's select an important low. Well, let's select this low here and see where that aligns. So then if we go here, that low should be here. That low is aligning with the 35. So you can see this simple setup here, really, I don't need to really do any anchored vWap analysis because I'm getting that information from these 7-day aparts. I mean, obviously I don't know that this 35 is really matching up with that low that I just selected, but it is giving me that reaction area. Remember, these things aren't exact, they're not exact stop points, they're areas of reaction. One thing I should mention, and I'll do another video on this too, is that you should really, in your system, in your trade system, when I say reactions, oftentimes people think a reaction is immediate, meaning it has to happen right away. You should have a tolerance of reaction. So this reaction here, this is a good example, and then I'll end the video with this. So in our system, we're using the multi-day vWap, and we're looking at these multi-day vWaps as reaction areas. And that doesn't mean we buy right on these reaction areas, but one thing in our system we should have, if we're using the 15-minute time frame, is what does the typical reaction block look like? So when we reach a reaction area like here, what does that typical structure look like? What is the typical pattern? Is it 5 bars? Is it 7 bars? Is it immediate? Typically, it's somewhere between 4 and 12 bars. Typically, you want to identify a pattern around a reaction area. It could be as little as 2 or 3 bars. That's obviously on a 5-minute time frame, but generally, you'll see here, this reaction area here, for it to hold up, meaning that you are using this reaction area as a long entry signal or a long entry area. We've got 1 bar that touched it, 2 bars, 3 bars, 4 bars, 1, 2, 3, 4, 5. So far there's 5 bars, really 4 before it really started taking off. But that's an hour of trading time. So that's an hour block. So really, if you're looking at this on a 5-minute time frame, this same area here around the 42 and 14, and you're looking at this same type of area, you would then want to account for an hour's worth of price action that fits a pattern around your reaction area. And that's how you'd want to account that. So you'd want to have that factored into your system. You want to understand how your system or how reaction areas in your system typically create these type of patterns. And you want to know that average number of candles, the average amount of time, what that actually looks like, what do the lows look like, what do the highs look like. That way then, if you're a type of trader that needs confirmation, I'm a type of trader where I'm a little aggressive. So as soon as it hits there, as soon as it breaks here, I might just add. And then as I get confirmation, I'm adding to the trade. You might be a type of trader that you want confirmation. So about this time, this would maybe fit the pattern of a reaction area. So just understanding that, and I'm kind of taking from another concept video that I'm working on, but this is a good example of using that or understanding that, especially when you're looking at reaction areas. So this really wraps up using the multi-day vWap indicator. Once again, you'll find a link down below to the indicator. You'll find a link down below to the Discord group. You'll definitely want to join that if you have not joined. If you're interested in the membership training, you'll want to join Discord and DM me, and I'll tell you how to get started with that. And that's all. I look forward to seeing you in the next video.